Hello, everyone. Tony here. Well, the sell off in global stock markets has intensified on Monday morning after China retaliated on Friday with a 34% tariff on all US imports, raising fears of a trade war and potential recession. China's response broke with its previous measured response to President Trump's previous 20% tariff increase earlier this year. The US has yet to counter, nor has China shown that it is going to devalue its currency, the CNY. However, both are likely to occur, especially if the US and China do not reach a compromise in the coming days. On that note, the door for negotiation does remain open. And over the weekend, it was reported that more than 50 countries have contacted the Trump administration to negotiate better tariff deals. However, there is a risk that the relief from high tariffs doesn't arrive quickly enough to prevent a liquidity crunch, and that even if they do get some relief, tariff levels will remain at significantly higher levels than previously anticipated. As we begin another volatile week, interest rate markets are pricing in 150 basis points of Fed rate cuts between now and June 2026. There is a first rate cut fully priced for June, with markets betting that the Fed will be forced to look through a tariff-induced boost to inflation this year to prevent the US economy from slipping into a needless recession. Let's take a look at the charts of the S&P 500 and the NASDAQ to see where they are currently trading and what comes next. Okay, in last week's video, which occurred on Monday, right around this time here, we were talking about the fact that we thought the NASDAQ would make a new low below this low from mid-March. And of course, it did make a marginal new low and then bounced higher. And we were of the view that potentially, if we were to see a break of this level again, which we were using the cash chart then, I prefer to use the cash chart because I don't really like the way that the futures are treated on the TradingView platform, the futures rollover, which is why I use the cash charts for the NDX and the SPX in these videos. But in this particular instance, we need to use the futures because there has been a very significant move lower this morning. So if you'll excuse me, I'm going to continue to talk about these levels using the futures chart. But going back to last Monday's video, we alluded to the fact that while it wasn't our base case, if we saw acceleration lower, we would need to relabel this as a wave 3 or a wave C lower. And acceleration is what's occurred. We now have seen a 4,000 point drop from this high here, which we would label as a wave 2 or a wave B using our Elliott wave analysis. And this is a wave 3. Now, at this wave 3 low this morning, 16,460, you can see we're starting to get a very healthy bullish type loss of momentum candle forming here. It suggests we've seen some capitulation, and this shadow wick or tail, which sits below the body of this red candle, suggests that we have seen some buying come into the market after this capitulation. That suggests to me that we are either at a low or close to a low. And the next move in the NASDAQ should be a wave 4 bounce. Let's say up towards this 18,500 area is the potential target, somewhere in around here before another move lower. But we'll assess that next move lower once we get into this area here. We are mindful, of course, that if the NASDAQ were to get above this low over here, then potentially we could just be dealing with an A, B, C corrective pullback, which took us back around 20%. Now, that is generally where we would expect to see equity markets fall to in the event of a recession, somewhere around that 25 to 30%. So we're not far away now. A lot of things suggest that we've come far enough. We're still not sure we're going into a recession. So maybe we get this wave 4 bounce while the jury remains out, deciding on what comes next with the US economy and whether the Fed can potentially step up and stop a recession if these tariffs do stay in place. For the S&P 500, very similar situation last week. Last Monday, we said if we start to see acceleration much through this area here, then we are looking at a wave 3 or a wave C lower. Now, after falling 970 points from this high on the 25th of March, it would be fair to say that's acceleration. It's much more significant than this drop we saw here of this 657 points. So what we've got in place is a wave 1 or a wave 2 or B, again using Elliott wave analysis, and this is potentially in the area of a wave 3 low. The capitulation that we saw this morning has been met by buyers. You can see that from this shadow wick or tail, which sits below the body of this little red candle. So there's still some work to do. This is a daily candle. We're not even into the full session yet on the US equity markets tonight. So at this point of time, this is what we're seeing. We're seeing some buying stepping into the market. And if that was to be confirmed overnight, then potentially, yes, we have got what looks to be a possible wave 3 or wave C low in place. And at the very least, I'd expect to see a bounce in the S&P up towards 5,200 to 5,250. So again, we need to wait to see how this daily candle forms at the end of Monday session on the S&P 500 and the NASDAQ. It's still yet to start trading. This is the futures market. But at this point of time, this is what I'm seeing and this is what I'm watching for. Thank you for listening and have a good week ahead.